Okay, it's time for our next session, Golden Bytes, turning currency into gold in MENA. As cryptocurrencies and blockchain technology gain momentum, they're not just transforming transactions, they're becoming a modern gold standard in finance. So how are market players leveraging these innovations to unlock unprecedented opportunities? This panel of leading experts will reveal the secrets behind this digital gold rush, sharing their strategies for navigating the rapidly evolving landscape of digital currencies in MENA. Our panelists are Jason Hughes, Senior Executive Officer at eToro; Sudhu Arumugam, Chief Product Officer at M2. Our moderator for this session is Anton Golub, Chief Investment Officer at FreedX. Welcome.
Thank you very much. Thank you very much to the kind audience for joining. We made a promise and agreement we're going to be very provocative, so this is going to be a good investment of your time. And thank you very much for the esteemed speakers for joining the panel as well. To open up the discussion, to reflect on the previous year, which was monumental in the crypto industry, for the amount of liquidity that came into the crypto industry, which was then reflected in the prices as well. And a key driver or a key product for the institutional adoption was the spot Bitcoin ETF in US, in the largest markets in the world. It seems almost as if Larry Fink himself kind of pushed through those doors at the SEC, and made it happen. I would love to hear your thoughts as experts and also from a product perspective, how you see the spot Bitcoin ETF, also ETFs around the world, ETPs. Are they going to be the driver going forward? As well, if you want to make a comparison to MicroStrategy as well, how that is a bit of a different product, but also a big driver of liquidity. And would love to hear your thoughts. Perhaps, Jason, if you want to kick it off.
Yeah, thanks, Anton. Look, like you said, it's a very monumental year for big changes in how crypto and how institutions were viewing accessibility to crypto markets. From the perspective of a multi-asset broker, we have all of those different access points to trade on our platform, and have seen an increase across the board in terms of interest, be it in the ETF space or in the underlying assets themselves, the underlying crypto assets. The momentum started with the changes to the SEC approach to ETFs, but then we really saw that sort of momentum follow through with the next step of political or forecast political and SEC changes, with Trump being re-elected and the relaxing of regulations potentially across the board in the US, but also with a very crypto-specific sort of view. So we think 2025 could be a bigger year, but 2024 was a great catalyst to lead into that.
And when you're on your platform, do you have more interest for the spot markets if you offer it for CFDs or for the ETFs? Kind of how do you feel what's happening in the industry? And then I pass the word to...
Yeah, so we're kind of split across real crypto, as we would call it, CFDs, and then the ETFs. I think on the whole, most of the trading that we see go through is in the real assets. That's predominantly because of from our client base, people tend to be long-term hodlers of the assets. In the CFD space, the charges are quite prohibitive from a long-term investment perspective. So it's better to trade without leverage, with the lower costs, and essentially own the asset. But like we said, across the board, particularly from October onwards, you saw an increase in equity interest. MicroStrategy that you mentioned became, a headline grabber, and I guess the crypto skeptical will tend to go towards the equity market and the ETFs because that's what they're comfortable with, that's what they're used to investing in. But the majority of our flows are in the real underlying crypto assets.
So you're Chief Product Officer at the premier exchange in the UAE. Would love to hear your thoughts. Where do you see the demand is coming from for these products? Crypto, but ETFs as well. And what do you think will happen in the future since you are an insider of the UAE ecosystem?
Yeah, I think, I'll speak about ETFs first, because I think the UAE and the Gulf is a little bit different from a demand perspective. But yeah, look, going back to your BlackRock comment, the IBIT BlackRock ETF, surpassed their gold ETF in about 3 or 4 months, right? And the gold ETF has been around 20 years plus. I think if you look at the Bitcoin ETFs right now, it's at 110 billion. ETH is about 10 billion, just by comparison. And I think in the current growth rate, they estimate that the Bitcoin ETFs by the end of this year will be bigger than all the gold ETFs put together, right? Which is just incredible. So that means 2 years in compared to a product that's been around for 20, 30 years in some places, especially if you look at ETPs. Back to what Jason was saying, I think the main driver globally from an institutional perspective has been the ETF because of the problem, the UI, UX problems that we have in crypto around storing native coins, right? And so it's a massive problem that we as an industry have to solve. Even though I've been in crypto for 8 years, I'm still absolutely terrified moving coins around and triple checking and double checking at every single send address, right? Which is, it just can't happen that way. And maybe AI agents and wallet, maybe that as that comes along, this process might get simpler. But right now, it's just too risky, I think, and too painful to handle spot crypto. From a regional perspective at M2, I think what we're seeing more is that, so for example, from a regional perspective, it's very, very different here. So ETFs, if you speak to BitShares and ARK and Aberdeen, who also cover this region, you'll see that they have the lowest demand for ETFs comes out of the region. And I think the reason for that is that in the UAE, the investors here are much more crypto savvy. And so they actually want specific coins and they don't mind holding the underlying, very much the opposite to, say, the US, where they want asset coverage rather than specific coins. And here, I don't think they want, they want Solana or Telegram or, they're very, very specific about what they want. So from a M2 perspective, we're seeing, our high net worth institutional clients, asking for very specific coins. They don't tend to come to us and say, what do you suggest? They come to us with a plan saying, I want to do a structured product in Solana, accumulated product, or, and then we have to structure things around that for them.
Okay, and just to ask, because I think it could be very interesting for a lot of people in the audience, are the big sovereign wealth funds in Abu Dhabi deploying capital or not? I mean, we hear Abu Dhabi, it's the capital of capital, right? Some trillions are managed there, or that's what's mentioned. What do you see there? Are we still there in the early days and we need to build more infrastructure, or are these sovereign wealth funds and the accompanying companies dipping in slowly into crypto? What do you see?
Yeah, look, I've been in the UAE a year now, and I wouldn't be surprised if 2 years from now, they said we've been buying Bitcoin for the last 10 years, right? We just can't tell. But from what I'm experiencing, the sovereign funds out of Abu Dhabi, and we are 70% owned by them, by the government essentially. The sovereigns are making equity investments in the infrastructure layer. That's for certain. They're very public about it. Same with AI as well. But I specifically, are they buying spot crypto or crypto ETFs? Not that I can see or heard yet.
Okay, thank you. And maybe I would like to also go back to Jason, but also to hear your thoughts as well about MicroStrategy. I mean, you listen to Michael Saylor, he's the person who will never sell. He has this weird structure with convertible bonds, right? So it's a volatility play, how he raises that capital. Recently, he announced perpetual share offering, which is again a very different structure. And on surface, it looks like a similar product. So we're now back again discussing products. But when you look at MicroStrategy, it's more volatile, right? more volatile than crypto, right? So how do you see it as a product? Kind of mirroring Bitcoin a lot, but not really, with more volatility. Who is the crazy target for that kind of product? And also considering that MicroStrategy, I mean, just to throw some numbers, best performing stock last year, the biggest options market in US actually, and as well the most successful convertible bond issuance actually from what he did. So interesting product, but kind of a mysterious product, right? Or at least it seems like that. So how do you see it? Yeah?
Look, I think that's a difficult one to call because you know, when you see a strategy being played out so publicly like that, you know, it's very clear the direction of travel for the business and how they're deploying the capital that they're raising in these different ways. I think it then grabs the headlines, and you see more interest coming through on retail platforms than to trade the underlying stock and options. So you know, it kind of once you start getting you know, companies or stocks hitting the front pages rather than the financial pages, you always start to see even more interest coming through at all levels. You know, if you look at the institutional investors that we were referencing before, I'm not sure they're going to be flooding to his stock in the same way. Though with the moves and the increase, you naturally have to get the ETFs buying into, you know, to mirror the moves. So it just depends how all of that plays out. But you know, I think it's a very specific investment strategy if you're going to be adding that predominantly to your portfolio. You know.
And Sudhu, what are your thoughts, and maybe also your opinion about the copycats? A lot of the companies around the world are mirroring, to a certain extent, or trying to copy the same strategy. Can we have a similar product in Abu Dhabi on the stock exchange? What are your thoughts? Provocative questions as promised to the audience.
Look, I think, you know, if you're asking me, should companies allocate a percentage of their corporate treasury towards crypto and Bitcoin? 100%. What that number is I think somewhere from 1 to 10% in my view. You know, at this stage of the maturity of the asset class. Issuing convertible bonds at zero coupon or zero rates, if you can do it, fantastic. Why not, right? And if that's the way to create your treasury from 1 to 10, I think that's a fantastic way to do it. Using that method to own more Bitcoin than your net asset, now that's a different game altogether, right? Which I wouldn't really recommend. Now, there's a battle going on Twitter right now about how much synthetic leverage is creating in the market, right? You got Raoul Pal, the Real Vision guy, who's got a huge following, and you know he says that is this the next GBTC? You know, that kind of the hidden bomb that's waiting to go off in crypto markets, and it could be, right? And obviously, very different to GBTC in the sense that GBTC had a couple of 2 or 3 large hedge funds that caused the issue, 3 Arrows being the biggest of them. Whereas here, MicroStrategy, the ownership is wide, right? Now, I mean, coming back to the volatility it creates, obviously for some companies that can only buy equities, this is a great synthetic Bitcoin play. But as we noticed, towards the tail end of last year, MicroStrategy was off 40% and Bitcoin was up. So it's the correlation is sort of broken down there. But I think the real volatility in MicroStrategy comes from their 2x leverage product, which everyone's piling into. And I think that could be the undoing of MicroStrategy, sorry. It'd be great if Microsoft came into it as well. But because I don't think it's their product, but it's creating the vol on their stock. And if that 2x leverage product becomes too big, it could cause massive issues for MicroStrategy as a company. So his own success, it might now be causing his biggest risk.
And what are your thoughts if in Abu Dhabi, sometime soon or not soon, we get a similar version of MicroStrategy? I mean, a lot of companies are creating similar products, right? I know in Japan, the best performing stock as well is a copycat of MicroStrategy. Since you are, well versed in Abu Dhabi, how do you see it? Is this feasible or not yet?
I'm not sure. Look, the one funny thing about Abu Dhabi is that they don't need to issue a convertible to buy crypto, right? So and the ones that are most likely to do it are the large, G42s and businesses like that, I think. So, look, ADX is still somewhat sleepy. I'm not sure they'd be too happy about their kind of, listed businesses going down this route, but we haven't heard anything yet.
Okay, thank you. And now thinking a little bit about ahead, kind of what might happen. So in a few days, we have the inauguration of Donald Trump, who was very, at least verbally, supportive of the crypto industry, and also very, we can say hostile, right, towards the regulator in terms of the changes that will happen, but also in terms of the so-called choke point operation that was happening in the US, where the US banks didn't want to work with the crypto companies. But a very interesting initiative is coming through in the context of strategic Bitcoin reserves. So should a country buy Bitcoin the same way that countries many, many decades ago were buying gold or stocking up gold reserves to actually protect their currency or protect their economy or even manage their monetary policy? So how do you see this potential idea of a Bitcoin reserve? Obviously, US doing it will be massive because of the potential liquidity, right? El Salvador has doing it kind of quite successfully with very visionary leader who is very pro-crypto regulation. Bhutan as well, so a country that's been mining, so using their own natural resources to mine Bitcoin. How do you see opportunity for strategic Bitcoin reserves? Be provocative as you can without pissing off too many people.
Oh.
It will be to you first.
Okay. Oh, look. If you read, I think Galaxy's research piece, which came out a couple of days ago, one of their predictions for this year, along with Bitcoin at 185,000 or something. But in terms of strategic reserves, their prediction was that there'll be five more countries that will announce a reserve in a Bitcoin. Look, if you read, if you read BlackRock's outlook for 2025, they're recommending that your portfolios, for corporates and individuals should be 2% into crypto, and the lack of and the declining correlation between equities and crypto this past year, right? At the early part of the year, it was about 60-70%, so you might as well own equities or MicroStrategy or Bitcoin. Didn't really make a big difference. Latter part of the year is down to 15%, and they expect that to get even lower, which means that it really is a portfolio diversification. And I don't see how it's any different for a country or a corporate. I think everyone should look at it the same way. US is a bit weird when you're the reserve currency as well, whether it makes as much of a big deal to them. But you can see why El Salvador and Bhutan and these guys have a strategic fund. Now, the problem for non-US dollar countries is that if you need to go to the IMF for a bailout, they're going to ask you to kill the Bitcoin part first. So there is that kind of synthetic choke point for anyone who's very public about this, which I think is going to be interesting to see how that plays out.
Jason, I would love to hear your thoughts. And just to throw out another piece of information, for instance, in Switzerland, so I lived in Switzerland for a long time, but now I'm a proud resident here in Dubai. In Switzerland, recently, there was a first step in a referendum where you gather a certain amount of signatures, where a referendum will happen to actually, the people will vote, should Switzerland actually create something similar in that context, the Bitcoin strategic reserves, as a part of their monetary policy. So what I'm trying to say is that this is actually serious thoughts around the world. So we'd love to hear your thoughts. How do you see this?
Look, I think the allocations that are being talked about and Sudhu mentioned is the approach that most are going to take. You're not going to see, or you're unlikely to see the sort of El Salvador approach again and again, and potentially not at this type of pricing at the moment. But if 186,000 or more is the price target, maybe you do. I think you mentioned regulation and banks working with the crypto firms, and that's something that you've kind of seen over here as well with the development of regulations and the time it takes for the banking system to get comfortable with those regulations. It often lags behind. So it'll be interesting to see how that dynamic plays out in the US. If the regulations start to become more friendly, how long does the whole system take to move with it? Because banks, big banks in particular, do move slowly still. And crypto firms move very quickly. It's one of the biggest difference between the sort of business models and the sort of size, agility of those native digital platforms versus the legacy banks. So dealing with that and seeing how that plays out this year is also going to be interesting, I think, as well as that sort of reserve question from the very big macro level.
Awesome. So now let's take a little bit of our discussion in a different direction, because we talked about Bitcoin or crypto, probably the most volatile asset class in the world. So let's talk about something that's stable, which is stablecoins, right? So one of the biggest success stories of the crypto industry are actually stablecoins. So these are assets stable in value, pegged or tracking a particular currency. Most popular are dollar stablecoins with Circle and Tether, controlling pretty much 90+% of the market. 250 billion in stablecoins issuance so far, so a massive number. So how do you see this massive success story? And also maybe to get your thoughts, because we're in UAE, the Central Bank of UAE approved an AED stablecoin. Is there an opportunity? Is there a market for an AED stablecoin? Who is the target client segment? How do you see this? First, let's talk about the dollar stablecoin. How do you see it, from your business perspective, and your thoughts on the AED stablecoin, however you want to proceed.
Yeah, look, again, coming back to regulation, you're seeing more and more regulation coming out in ADGM has put out their sort of stablecoin approach. So I think as regulators get more comfortable with the products, when I first looked at the accepted virtual assets within ADGM, there was no stable coins permitted. So the views have changed over time. It's definitely a move, I think, that is looked at as a settlement and transactional play rather than some of the other utilities that you've seen from the crypto space. So where we can get quicker settlement, lower cost of transactions, 24/7, coverage, I think it becomes super interesting, and you do see people in the region, the more legacy providers such as MasterCard getting involved in these projects and partnerships nowadays. And I think that's where it becomes really interesting, where you get the sort of existing rails trying to connect with the rails of the future, which are rapidly developing. But for speed, cost, and ease of access, I think it's the way that the payments and settlements need to develop over the coming years.
So I give it over to you.
Yeah, look, I think Jason's been very kind when he says settlement and transactions, because I think the vast, we all know 90% plus is trading, right, for stablecoin usage. And I think 2025 and 2026, and we'll see the change, like the MasterCard crypto credentials. We'll see cross-border settlement going on, remittance. All these markets being attacked. But unfortunately, right now, or fortunately for Tether, 90% or 95% is for trading purposes and sit on exchanges, right? But I agree. I think this is the path. I do. The AED coin that you mentioned it's very interesting because we're here. We ourselves have our shareholders just announced a partnership with Tether, so we are also doing our AED-backed stablecoin. We're going through the regulatory process with the central bank at the moment. We think it's a very, very important part of the future here because of the size of the remittance market, and also the secret USP, which is that it's fixed to the dollar. So it actually enables a lot of people who don't want to have to send money into New York to be able to transact. And I can see the AED stablecoin become a proxy trade currency settlement mechanism for lots of countries, because you're not at risk of U.S. banking constraints there, which is, I think, it's a big deal that is obviously not advertised, but I think it's a great USP.
And in the context of something that both of you have mentioned, is stable coins are a global phenomenon in terms of how they're used. But having said that, the regulation that's now very much focused on stablecoin is not harmonized globally. So for instance, in Europe, you had the rollout of MiCA actually, that very specifically defined how the reserves have to back the stablecoins and where they can be and cannot be. And as a result of that, Tether or USDT is not an approved stablecoin in Europe. So wanted to ask your thoughts. Do you see an opportunity here for harmonization of the global regulation? Is this even feasible? Because if you look at it on the fiat side, we don't have an equivalent of that, right? People are aware that currencies are the reserve currency. It's used everywhere. You cannot easily impose restrictions, or if you do that, there are consequences for the economy and the financial markets usually. So how do you see this dynamic on the regulatory side?
We're a multi-asset platform regulated in multi-jurisdictions. Across those different licenses, there isn't necessarily a harmonization of regulation. So, from our looking at our own business model, which is just a small element of that, you do not get harmonization. You get similarities, and you get certain directions of travel and themes that come into play. But everyone likes to create their own rules and has a different interpretation of how they want their market to operate. So expecting harmonization on something like this is probably unrealistic. So I think we will get those nuances and subtleties from region to region. From the stablecoin perspective, the ability to show the proof of reserves and demonstrate it in the most accessible and confident way from an investor's and user's perspective, I think is key to continuing to build that sort of usage and utility. If that doesn't happen, then and confidence gets broken, then people are not going to want to be using it to settle at all. So it's an important part of the environment and regulation. I'm not sure if anyone's got it right. I think it will continue to develop over time. So we might be looking at a development in MiCA, but it doesn't mean it will harmonize with what else is out there.
So I would love to hear your thoughts and also maybe a reflection on other stablecoins. So for instance, US dollar stablecoins are 90+% of the market, 200 something billion. Euro stablecoins is 250 million, so it's with a M, right? So microscopic compared to dollar stablecoins. And would love to hear your thoughts. What is holding us back there? Why don't we see other stablecoins growing or actually serving a market?
Yeah, I mean, if you look at Tether, I think, what are they, 180 billion in dollars? They've had a euro stablecoin for many years now, and that's at 100 million. And, they're the market leader, the brand, and yet, if you look at Kraken, and I think there's a very simple reason, because until today, it's purely a trading mechanism for crypto exchanges and platforms. If you look at, I think Kraken are the market leader in euro-denominated crypto pairs, and that trades, a fraction, less than 1% of dollar volumes. And I think that's just reflected like for like in the stablecoin AUM. But as we move towards, use cases for payments, remittances, and all of this, I think, dollar will still dominate, but hopefully over time it will approximate the fiat breakdown rather than being so asymmetric as it is now. And another, going back to the first part of your question, I don't see harmonization happening anytime soon, but of course any jurisdiction that can maybe step in and take the best of everything might have a great chance of winning, and we obviously don't know that yet. For example, ADGM is really, really good about having, if you have a stablecoin approved there, you need a fixed feed into your banking balance so that, the whole world can look at it at almost real time to make sure that your cash deposits match your circulating stablecoins. Fantastic. Bad news, cash only. So you can go, it's okay right now, but if rates go back towards 1 or 2%, it's going to suck for a stablecoin business. So they wouldn't want to take on the burden of that. somewhere else. You can hold money market funds; they'll move there. So, that's that tricky part of the kind of business profitability. If you look at Circle, Jeremy Allaire has been, pushing regulation for years, and he stands at 10 or 20% of Tether. And Tether has been in the grey space and moving around and very, very efficient and innovative, and they get bigger and bigger, right? So the firms that, and obviously Circle believe this is going to change, but he's been saying that for 5 years now or whatever, so.
Thank you. So now to turn again to a bit of a different topic. So it's a perception or an image that UAE is one of the best digital assets crypto ecosystem in the world. Have a very proactive, visionary, and able regulator, both VARA and ADGM. So as an insider, as a part of the digital asset ecosystem here, is this the case? How early we are, how late we are in the crypto ecosystem here in the UAE? What is missing, if you think there is anything missing? And what's coming in terms of the products and services that we might see in the UAE?
Maybe I'll start. Look, eToro and M2 are both ADGM regulated. Hugely respected regulator globally. So is VARA and so is ESCA. Now, if I was an outsider looking to come into the UAE, I'll actually be kind of confused. Bit like us looking at Europe. Like, which regulator do we go to? What does what mean? Who's got an MOU with who and who hasn't? Can you market in Dubai? Can you not? So I think, the UAE has been very, very good. I think ADGM came out with its regulations in 2018, VARA a bit more recently, and now ESCA's looking at it. So I think the really good news is that the proactiveness of the regulators, all three of them, to engage with stakeholders to try to improve the process and harmonize things. So I think that's massively positive, and the UAE is way ahead. And now we're looking at RWA legislations and lots of good things, right? So that's the positive. The negative being a bit confusing, 3 or 4 regulators in such a small country. And the other, I think the biggest negative by far for the UAE from a crypto perspective is that the banks are incredibly nervous to engage with crypto businesses. I think the best example and what I like to see is Bahrain, because the central bank of Bahrain regulates both the crypto exchanges as well as the banks. So if you have a CBB license for your crypto exchange, the banks have no issues giving you a bank account for client money. I think the UK, nowhere else in the world, as far as I know, has that same mechanism, and it's really, really obvious here. We're very lucky as M2 to have one of the largest banks in the country being our banking partner, but even then we can't say who it is. Now you all know when you deposit and withdraw, I think, but the point is that that's how nervous one of the largest banks in the country is, to do business here.
Yeah, unfortunately, I don't have the same backing or investment partners. So the banking rails have been sort of very difficult to navigate locally within the UAE. So much to Sudhu's point, if you look at the regulations and the sort of forward-looking nature of that, and the fact that ADGM has had a framework since 2018, all of that super positive. I agree on the confusion and the lack of harmony within the country. And it's interesting sometimes speaking to the regulator, they'll talk about looking at GCC partnerships, and it's kind of like, well, can we settle UAE first and then look broader? I'd go a step further as well, and I won't name names, but from those support services that you need to run a regulated business, whether it comes to banking or audit firms. So I could not get our global audit firm to audit the local entity because they were nervous about taking on a crypto licensed broker. Now all my crypto transactions go through the other entities. Very little is actually transacted here. So from a risk perspective, I viewed it as quite small risk, but their risk appetite was not there to partner with a global brand because of the crypto element. So at times it's those things that you require to run a regulated business as well that needs to be there to support your business, which can be, lacking.
And so I think this is very important just for the audience to understand, because we started off saying how US is challenging Operation Choke Point. You cannot get a bank account. But when we heard the reality as well, that it's a global phenomenon, right? In general, the legacy system, the banks, they're not comfortable working with crypto companies for also reasonable issues, right?
Look, I think it's risk appetite, and you look at risk and reward, and the segment is still a growing and small segment. So there are new digital banks in region who are less well established, who have a bigger risk appetite, but then they some of them don't pass my HQ's creditworthiness because they're so new. So nothing is ever straightforward, right? So,
and maybe to hear your thoughts, and then we move to the last topic, if I look at the timer correctly. So in Switzerland, for instance, we have two crypto-native banks. So it's SEBA, or MENA, as they're called today, also have an entity, a subsidiary in Abu Dhabi, and Signum, which yesterday they announced they're a unicorn now, did a successful financing round. So kind of this business is growing. So the reward part is kind of there for them at least. So is it feasible, is it needed to have a crypto-native bank in the UAE? And just to explain what I mean by a crypto-native bank, it's a bank set up specifically to serve crypto companies. In the UAE, we don't really, there's one bank that's kind of serving pretty much everyone, but I don't think they're crypto-native. But do you think there's an opportunity, a need for a crypto-native bank? For sure. I mean, the number of firms that are coming here now, particularly to Dubai with Vara, there feels like there's an opportunity. And like you said, some of the neobanks that have been set up are quite crypto focused, but not necessarily digital native. So there could be a gap. You never quite know, though, right? You never quite know.
Yeah, no. Look, I think absolutely there is a gap. So I agree. The vast majority, as we discussed earlier, of crypto transactions are in dollars, and investors think dollar prices. When I think I'm not a native Emirati, but I think even the Emiratis probably think of Bitcoin as at 100K rather than whatever the 500,000 or whatever 400,000 dirhams. And for the banks that are here, and if they're thinking about touching a crypto business, they're even if they get past that hurdle, they're all, I guaranteed, absolutely petrified of losing their dollar banking rails. So, we can get a crypto native bank here or banks, fantastic, but what about the dollar leg? It has to be, this is where it has to be someone who can, who's actually in the Fed money wire system, someone who says, you know what, I'm going to publicly do this and maybe open a subsidiary here or...
But that's where the changes in the US over the next 12 months could really open up everything, even locally, that sort of risk appetite. So the US regulations actually could have a big impact over here and start easing some of those pain points locally. So thank you. I mean, these were all awesome answers. I'll have one more for the end, and then we can open up the floor for discussion. So I asked many provocative questions, but it was all within your comfort zone because you're experts. So now we're going to move on something that's kind of coming up lately in the crypto space, and is this convergence between AI and crypto. Everybody's talking about AI agents, and then what do crypto people do? They tokenize the agent, right? And then there's a token running around. So how do you see this? It's one of the hot narrative, at least when you talk to the VCs who invest very early stage in US. They talk a lot about the AI agents and this convergence crypto AI. How do you see, is there merit to that beyond the price, right? Are you using AI in your daily life? How are you using it? And would love to hear your thoughts on that. And then we can open up the floor for discussion.
I actually, look, this is not something I know much about. I'm very, very confused about the crypto part of AI. I have no idea what, AI 16Z token or, I think these are in the same, for me, they're in the same category as meme tokens. I think there's like a community punt, have a bit of fun, because I have no idea what the relationship between that and ChatGPT and the other systems are. I think there is none, right? So now, if you think that AI agents are going to, transact with each other, I'm pretty sure they're not going to be accepting each other's tokens. They'll have to do something that can be on-ramp to off-ramp by someone somewhere, because AWS is not getting paid in a random coin that you've just made up, right? So I think that play is going to be happening. It's going to be happening in Bitcoin and Bitcoin Cash and Ripple and whatever, Solana type things. From M2's perspective, I mean, we are literally scratching at the very ground level of this. I think every business has to, otherwise you're going to be out of business over the next few years. For us, we're beginning the journey on from a customer chat box perspective and customer experience. So we've got that running in our beta test environment. We'll put that out probably next month and take it from there. Now, obviously, longer term or medium term, we're looking at AI portfolio management and that kind of interaction. I'm not sure how the regulator will see that and how all of that fits. But I think we all know what's coming. We all know that what we're touching is like the ground level of this compared to where it is, But let's see,
The crypto element, I can't comment on that. That's beyond my level of understanding for sure. And in terms of in our business, we're utilizing it for the sort of basic client servicing and experience, and sort of exposing and improving and different iterations of that chatbot experience, and looking to constantly improve that and add sort of more levels of complexity to what it can service without human interaction. Interestingly, that leads on to how we monitor that, and creating almost like AI tools to then act as the, if you like, compliance reviews of the AI bot. So almost layering up the AI technology in that respect. From a marketing perspective, our last few creative ads have been purely AI generated. So working with marketing agencies who have created, actually the one I liked the most was our US one. We got our New York license for securities trading. And they did a dancing bull and bear in the middle of Times Square, which was just cool. It was good. And different things like that we're sort of playing around with. But again, when we create lots of marketing creative through AI, at the moment, the compliance channels are manual. So we can create loads of very quick AI-generated content, but until we get to an AI review of that, there is a natural bottleneck in the system. So it's understanding how everything interrelates across departments and across the whole business cycle with AI solutions.
Awesome. So this is very impressive, and I'm quite surprised how you're using it. And also, just to explain, I think that for the audience to mention, where is this crypto or tokenization part where it's lacking sanity, right? So the AI16Z, so copy of A16Z, basically it manages a portfolio. You seeded it with some capital, and then an AI agent basically deployed that capital. I don't know if you know it. The AUM of AI16Z is around 1.3 billion. So they did something right. There is a version of Sequoia, but with a K. Okay? So one of the partners at Sequoia launched his own agent, and he as well manages capital. He's a bit less, but still going strong. But I think we all then miss the part is, why do you then create a utility token of that agent, and what does the utility token do, right? So I think this is the challenge. And I want to thank you for the great contribution, really provocative questions and amazing answers. And maybe at this time we can open up the floor for any questions if you have. So the speakers were super clear in everything, so there's no questions. Thank you very much. So please give them a round of applause.
Thank you. Thank you, guys.